Hi. Last time we looked at the element of cost of PPE. Today, we want to be looking at the treatment of decommissioning liabilities. When you have environmental provisions in your account, how do you treat them with respect to IAS 16 property, plant, and equipment? Decommissioning liabilities or environmental provisions happen when a company, maybe it's in the chemical industry or oil and gas extraction, and they require that company to return the site to the way it was after they have finished their exploration. This can also happen in the mining industry. So once that happens, if you mine gold or other mineral resources from the ground, at the end of the period, you're supposed to return the ground environment, the site, to where or how it was before you met it. And once that happens, you make a provision for how much you're going to pay at the time you're supposed to return the site to how it used to be. And IAS 16 property, plant, and equipment require us to add that cost to the cost of your property, plant, and equipment, as you may have seen in our previous video. So we want to look at a short illustration and see how we treat that. So we have a question here that says, on 1st July 2014, Bombardier opened a chemical processing plant. The plant was due to be active for 5 years until 30th June 2019, when it will be decommissioned. On 1 July 2014, the cost of decommissioning the plant were estimated to be $4 million US in 5 years' time. They consider that a discount factor of 12% is appropriate for calculation of a present value, and discount factor 12% for 5 years is 0.567. So what happens here is that if you count 1 July 2014 to 30th June 2019, that is 5 years, and the cost estimated to return the site to how it was before they started the exploration is $4 million USD, and that will happen in 5 years' time. So for you to add this cost to the cost of property, plant, and equipment, you add it using the present value of the amount. And to be able to find the present value of 4 million that you are paying in 5 years' time, because you are not paying it today, we call it a provision, and taking into account the time value of money, you are now going to pay it in 5 years' time. Therefore, you should find the value. If we were to pay it today, how much would it be? So you use a discount factor of 12% to find the present value of 4 million to recognize that amount as at today. The question here has made it simple for us by showing us what's the discount factor of 12% in 5 years' time. I'm going to show you how to do it in the next slide. So that is the requirement. So the question, what are the requirements? Number one, what is the present value of the liability on 1st July 2014 and 30th June 2015? Meaning that at the inception of the contract, or when you are commencing your exploration business, and 1 year after. And the second question is, what is the amount to be debited to the cost of PPE at the beginning of this exploration activity? And the third question is, what is it to charge to the statement of profit or loss in respect of decommissioning for the year ended 30th June 2015? That is 1 year after. So let's find the present value of the liability on 1 July and then 1 year after. So the first step to take into consideration is what is a discount factor? The discount factor is the finance cost, or the cost of capital of the company, looking at 5 years' time. So the discount rate is 12%, and you've been told that the discount factor of 12% in 5 years' time is 0.567. If you were not provided this in an exams, let me show you how to do it. That is what I've highlighted in yellow here. So 1.12, 1 is a constant. If I was given 8%, that would be 1.08. If I was given 5%, that would be 1.05. But since it is 12%, it will be 1.12 raised to power minus 5, exponential minus 5. If you use your calculator and do this, you're going to find 0.5674. But because 4 cannot be approximated, we leave it at 0.567. So if you multiply 4 million by 0.567, you're going to have 2,268,000. That is the amount of liability as at 1st July 2014. But what is the liability in 1 year's time? What you do at the end of year 1 is you do what we call unwinding the cost. And to unwind the cost, you multiply the present value by the discount rate, not the discount factor. 0.567 is discount factor. The 12% is the discount rate, or the finance cost. So if you say 2,268,000 multiplied by 12%, that gives you 272,160. So at the end of year 1, you unwind the cost and add it back to the initial liability. So if the unwind cost is 272,160, if you add it to 2,268,000, that gives you 2,540,160. So this is the liability at the end of year 1. So on 30th June 2015, this is what you're going to charge to the statement of financial position as the provisions for decommissioning liability. The liability amount at the beginning plus the unwinded or the unwinding of the cost after year 1. So if we go to year 2, you need to unwind it again. It's not going to be 12% of 2,268,000. It's not going to be 12% of 2,540,160. So this is liability at the inception, 2,268,000, and liability at the end of 1 year, 2,540,160. I'm going to tell you what this unwinding stands for when we go to the next slide. So the next question is what is the next question had said what is the amount to be debited to the cost of PPE on 1 July 2014? So as at the inception of the contract, or when we need to add this cost to the cost of PPE, we are not going to add the 4 million that is the amount that we are paying in 5 years' time. We pay the present value of the 4 million, and the present value of the $4 million dollars payable in 5 years' time as at today is 2,268,000. So this will be added to the cost of PPE. I'm not overemphasizing this because this had gone in our first video, because we mentioned the 3 elements of cost of PPE. You can look at it and see what we did there. So, but this is the amount to add to PPE. And the next or the last requirement had asked us, what is the total charge to the statement of profit or loss in respect to the decommissioning for the year ended 30th June 2015? So how do we do that? The question can actually even ask you, what is the finance cost? So the finance cost is this unwinding that we've done here. So when you say 2,268,000 multiplied by the discount rate or the cost of capital, this amount is the finance cost at the end of year 1. If we are looking for finance cost at the end of year 2, let's say 30th June 2016, it will now be 12% of 2,540,160. But at the end of the first year, the finance cost is 2,268,000 multiplied by 12%, that's 272,160. We knew that already. And then because you've added this amount to the cost of your PPE, you're supposed to look at the depreciation. And this asset is going to be carried in the books of the company for 5 years. So you say 2,268,000 divided by 5 years, and that is 453,600. So you need to add the depreciation and add the finance cost. This is the total charge to profit or loss. If you're supposed to prepare the profit or loss extract, you're going to have depreciation stand separately as 453,600 and finance cost stand separately 272,160. But if you were asked this question in a multiple choice or constructed response question in an exams for ACCA or any professional exams body, and they ask you for total charge, you find the finance cost separately, depreciation separately, you add the two together, you should have this amount. But if they ask you for finance cost alone, that is how to do it. If you are asked for depreciation alone, that is how to do it. And take note, if you were asked for total depreciation charge and there were other components of PPE, let's say the subsisting amount of PPE was 10 million, you now need to add 10 million to 2,268,000, then you depreciate the whole amount over the lifespan of the exploration process, and that will take us to the cost, the depreciation chargeable to the profit or loss. We are going to be looking at the next concept in the next slide, and that will be how to look at gain on revaluation and gain of profit or loss on disposal when there is revaluation charge. If you have any comment or question, you can put it on the comment box, and then I will respond to you personally. Thank you.